right, good morning, traders. This is Blake Morrow. You are listening to the Morning Edge webinar, and I am extremely excited today to bring in our special guest. I just said desk. Special guest, Nick Trades, or Nicola Duke, better known as. And let me find her really quick in our audience here, and I just unmiked her. So, Nick, can you hear me?
Gosh, I hope so.
Yeah.
Hello.
Good morning. How are you?
Okay, a bit nervous.
Oh, you shouldn't be. You shouldn't be. Hey, I was thinking, Nick. Oh, first of all, I want to thank you for taking the time and spending it with our traders here on the Wise Trade webinar. You've been, I believe I had you on as a guest a couple of years ago. Is that correct? Oh, I want to say
No.
I've never have.
Um,
I think I have. I'm 90% sure I
yeah, do
have.
you know, I think you did, and it was with Mr. Brazil. So
It
yeah.
might have been with
It
Chris
was so
Bear. It
long
was
ago I
years.
don't remember.
It was years ago. It was years ago.
Yeah.
And at any rate, it's been way too long, and I'm so happy to have you back. And I'm so excited that you graciously accepted. So, welcome to the Morning Edge.
Thanks.
So, hey, I wanted to ask you a question. Actually, I got a bunch of questions for you. But first of all, you have a really interesting past on how you started trading, and I think a lot. And I say interesting because I think it's so awesome. Could you take a few moments and tell the traders who maybe don't know exactly who you are a little bit about yourself and what you do and how you got here?
Okay, so yeah, I was that when I was a teenager, my mom got me my first account, and I invested really. I wasn't trading. Um, I've always had stocks and shares, and I've always been kind of interested in the stock market. But I joined the military as an RAF air traffic controller, and then I left, and I went to be a civilian controller. I did my civilian licenses. I went to Heathrow, and before I was there, they a chemical bank did an experiment, and they recruited a bunch of traders that they thought air traffic controllers to be traders because they thought that they would make good traders and good decisions. And in fact, none of them did, except one who was the woman, and she absolutely nailed it. And so I always thought, I want to be a trader. I want to be, and then I never did. I just did that, and then I ran an air charter company um, in Toronto, and then I met a guy who wrote Victor Sperendio's book, Methods of a Wall Street Master or whatever. It's on my bookshelf behind me. And that's when I thought, wow, do you know what? And by then I'd made enough money that I could lose and learn to do it. And so that's what I did. And it's a long road. Like you think, oh, I could just do this. I've read the book. I can do this. And I joined a live trading room, which was probably the best decision I ever made. And I still use some of their methods that I learned there. Um, so I did that. But yeah, it just started me on a really long road.
That's so awesome.
So I
Being
was really lucky. I had a guy to mentor me who knocked some rules into me because I kind of knew what I was doing, but I just couldn't get profitable. And so that was really lucky. I met a very cool guy who worked in London for Bruce Kovner, who's
Oh
and
yeah.
he was so disciplined. He used to shout at me so badly. He made me cry twice. So and he's
Sometimes you
quite
need
nice,
that.
and I know he's a really nice guy in real life. I met him through Tom Dante, who most people know
Yeah,
on
of
Twitter.
course.
So yeah, so I was really lucky, and so now I'm teamed up with somebody, and I'm at a fund and backed. So that's kind of cool. But it's
That's
quite a road.
it is now. So now coming from an air traffic controller background, I mean that tells me right there you were a critical, quick, fast thinker. And is that really like if you had to say, these are the traits that you need to be successful or to really be able to do well in the markets, what would those traits be if you had to think just off the top of your head?
I think my view of that has changed a lot because I think that the most important one um, needs to needs to be that you need to be able to function well when you feel uncomfortable, because you know trades that you do don't always work straight away. You can be offside. but you're not wrong, and it affects people. It can affect people quite badly, and you need to be able to still function well and make good decisions when you're scared and or like we're not scared, but uncomfortable, and it is uncomfortable. Um, so you still, I think the most important thing is you kind of need to be feel on edge and uncomfortable, but still be able to make good decisions.
And so adaptability to the current environment is probably really
Yeah,
important for you. Well,
I would say the last couple of months have been the hardest I've ever seen, because it feels like they're really good markets because they're moving a lot, but they're not. They're just volatile. They're just bigger ranges, but they're not trend moves. So they've
right,
been I found them really hard to trade, because you'll get a really big move that won't let you in, and then by the time it turns and it comes back a bit and lets you in, it's over. So you don't want to be in it, and then you get
right.
run over. So I found that quite difficult. Plus, I find unlike when I was trading before, when you're a fund, you start the year and your account goes back to zero. So you start very cautiously at the beginning of the year because you don't want to have a bunch of losses. If you go 5% down in December when you're massively up on the year, nobody cares. If you go 5% down in beginning of January and you've got no cushion, you're out of a job. So
Right, right. That's and that mindset's a lot different. It can be a lot different from somebody who
yeah,
trades, from home that might not be putting so much, and they trade for themselves, might not be putting that type of pressure on themselves, but trading for a fund could be quite different, of course.
yeah. So
So,
you start the year, you go really slow, half size, get some
yeah.
wins under your belt, and those markets just been horrible. But yeah, I know it's a bit better now, but that's just been my view of it. So especially, I think a lot of it's to do with the dollar and this consolidating range. But I really do. I look for very simple patterns. So
Okay, well, speaking of
simple
patterns,
levels and stuff.
and I know. Let me just give people at home my view of you over the years. You were one of, I would say, the handful of maybe a dozen traders I first started following on Twitter. When I joined Twitter 6 or 7 years ago, whatever the number was. And you and I have had a really nice relationship. We've bounced ideas off of each other over the years, and it's been great. And one thing I've always looked at you as is really very very good in identifying fibs and harmonic patterns. So can you tell the traders how you analyze the market? You can show us charts if you want. I can pull up charts for you. But what is your methodology of how you trade? I mean, and why? How does that work?
So I suppose I draw a lot of fibs, and I do a lot. I look for a lot of confluence, just like the Fibonacci Queen, Carolyn Borodin, if you know her.
I know her
She's
personally, yes.
very inspiring. So I do a lot of that, but I suppose I'm more looking at the waves. So, when I first started trading, I looked for very simple trend patterns. So if you got a higher low and then you got a higher high, oh, we're in an uptrend now. And quite often that would still be a correction. All you're going to get is the second leg. And then when I started measuring the relationships between all the legs and looking for patterns, just zigzags, which is exactly how harmonic patterns are, and how they line up with the fibs. And then um, that's when it all kind of started clicking together for me. And so I'm really, and I suppose in essence, I'm really a very simple like ABC girl. So I'm always looking for the mathematical. If a market makes a move in one direction and then pulls back and then continues, I'm always looking for the mathematical relationship of the second leg to the first leg. And if
Aha.
they're equal legs, to me, that's much like an ABC correction in Elliott wave. That's potentially quite bearish. We could then see a new low. So I always try to get in on those. Like I bought the pound this morning exactly on that setup. I sold the Aussie dollar yesterday exactly on that setup, which I can show you if you want.
Yeah, absolutely.
Because
I'd
it's
be.
like the Aussie dollar, big picture, I'm quite bullish the Aussie dollar. I'd really like some buying dips, but if it says sell, then I'll. So it's really counter my selling the Aussies, I suppose, counter my bigger picture view. But
So I'm gonna let you do is I'm gonna let you show us some of the charts that you're looking at. But let me ask you this: how important is it to you? Because you said something was really interesting. You said I'd really like to buy the Aussie because I feel that the Aussie's, it's from these levels maybe bullish from here, but I'll sell it if it's telling me to. How important is it to you to have your maybe macro backdrop line up with your technical views? How important is that?
oh, really important. I'll do bigger size. I'll try and run it. I'll give it more room to breathe. Um, I'll add to it, whereas I won't do that if it's counter trend. So that's
That
the difference really between the two for me.
Got it. That's awesome. Okay, that's exactly what I would be. That's the way I try to approach the market too. Is if the
Yeah.
technicals match up with the macro backdrop, then I tend to be a little bit more aggressive. And if it doesn't, I tend not to add as much, or I tend to be a little bit more looser on that. Now, let me ask you this: do you want to take a look at a chart, or do you want me to do it for you? Because I'm
Yeah,
going to
no.
flip it over to you.
Okay, I don't know how. Does it let me choose which screen? Because I've got a
Oh
bunch of
yes.
screens on this. Okay, cool. All right,
Yeah.
then
Here
flip it
goes.
over.
So it's coming over to you. So you should see it says you can pick which screen. Oh, okay. Right now I can see the E-minis S&P
Okay.
500.
Okay, well, I'm on the wrong page. Could you take it back for a second?
Sure.
Oh,
Yep,
wait,
no
no,
problem.
let's see if I can change it. Hold on. Um, no, it's
That's okay.
not that one.
I see a bunch of small charts. Okay. No.
Okay, that's
Now
the.
I see
Okay, so
the
this.
pound. Yes.
Okay, so the pound. So I'm going to flip it up to a 4-hour chart. So when I say I'm a really simple ABC, I've cleaned up this chart for you. This first drop move in the pound was equal to the second drop move where this green line is. So that's an ABC
I see
correction in
that.
the pound from a big bounce and then an ABC. So I bought the pound this morning on an hourly chart because of that. So this was before the data, then on the data it got a dip down. So this is where I bought it. And so that, for me, I don't know if it'll work, but that's the kind of pattern that I look for, and it works on big picture and small picture as well. So this is the Aussie dollar daily. I'm going to put it on a 4-hour screen. So we got this we had this sharp drop in the Aussie. So then I was on watch for a second leg lower. So when I draw it, I would put a fib on like that. I see that we rolled over at the 61.8. So for me, that means, we might get a Gartley pattern at the 78.6, which is up here. And so then I drew on an A, B, C like this. I'm on CQG and it doesn't draw harmonic patterns. So all the harmonic patterns I draw myself. So
Freehand.
now freehand. So now I've got my reversal zone here. Sure enough, it rolled over. So there was this consolidation, and I sold the break. I took half off when it bounced yesterday. I'm still in by the skin of my teeth. So we'll see where that one goes. But if I clean this up, you'll see that it works on, and I draw these patterns on a 5-minute chart, and I draw them on the daily or the monthly. If I go up in the Aussie dollar to, okay, so this is a quarterly.
I was going to say you go to like.
So this is.
I was going to
So
ask
that's
you.
an annual chart. If you go back to the 70s. Okay, so we go back to the 70s in the Aussie dollar. So
Yes.
we have a really nice rally, and look, it turned exactly at the 50 fib, came back, and then this second leg, you can draw it. This second leg is exactly equal to the first leg. So it made a perfect A, B, C, D in the Aussie dollar. And so now, take that one off, and we'll clean it up, and we'll see what it's doing now if we go down. Looks like, so for me, like the 23.6 fib is like one of my touchstones, and there's a lot of confluence here, which is why I've got pink lines. So I'm actually kind of thinking we might go higher here if I put an ABC on here, you can see that this messy leg, first leg lower, is now exactly equal to that first leg. So now this is why I'm kind of, and this is, remember, is a quarterly chart. So
Yeah.
it's a big view, but that's my big view of the Aussie. I think potentially, because they don't all work, we could go higher from here in the Aussie. But it's messy at the moment. And it's, you know, it's messy because none of these dollar pairs are all doing the same thing. Because if I go back to the pound and I take this off, and I go up in the pound to my big, we'll go quarterly, and so we'll go quarterly. You can see how the pound does this. Okay, so the pound, like the 23.6 fib for me is key. I've drawn the fib from this high, not this high, because the 23.6 fib is where it works. And you know, it's 61.8s and 38.2s are often sloppy tests, but 23.6 are usually sharp. So that's why I've drawn it this way. And so I'm looking at this. So I look for them to be equal or 61.8. So if I draw that, so 61.8 of that decline comes in down here like mid 120s. And then if I draw from this decline to this decline, oh wait, try again. If I draw from that decline, you can see that lines up there as well. So then I'll put a fib on here and say what's going on here, and there's the 127. So there's a lot. I don't think I've even got that one quite lined up properly. When I line it up properly, there it is. It's all there. So that says to me we're probably going to about 124.30.
So if we can get to
but at the moment,
124.30, that would be a huge area
that's
for
a huge buy. But yeah, if we do a Brexit or something, you know, we might now. CQT is not very good at lining it exactly on the highs and lows, but there it is. So but yeah, I bought the pound today because, you know, of the short-term pattern that I showed you.
Sure. Well, that's cool.
So that's
that's
how
good.
that works.
I love it, Nick. So
yeah. So that's what I'm thinking in the currencies.
Well, you also have what other markets do you trade? Because I know you trade some other commodities too.
Yeah. So when I trade these, I also trade. I really like grains. You know, I analyze my performance in all the markets, and I seem to do better in grains than most other ones. So although they scare me, I trade wheat and corn a lot, and soybeans occasionally. So I'm looking at them. Everyone wants to be. I want to be bullish wheat, but I think we have another leg lower. I'm really excited about sugar at the moment. I'm just waiting for it to bottom in a B leg, and then I can buy some or a wave two. And oil, I'm short-term bullish. I think potentially, you know, we might have put in a good bottom for a bounce, but it hasn't done enough to convince me yet. And I'll switch to my screen and show you that one. So,
yeah, I would love to see it because, you know, crude is all the talk right now. Obviously, everybody's looking at it. So
I know. Like whenever I look at it on it, it's a double bottom. So this is I'm going to just go to an April chart. So that's no continuation. So if we just look at April, then we've double bottoms around this 28.75 level. If I go to a continuous chart, so it rolls over continuously, it's still a double bottom, but it's just a bit lower. And you know, this looks to me really a lot like the S&P. So for me, is if we don't get above here, sort of around 32.50, we still have the potential to go lower. I did think that we were going to go to 25s, mid 25s, because I had a lot of fib confidence there. But if we get above sort of 32.50, I think we're going much higher.
Right, because then that's going to put that double bottom in play versus it being maybe a wedge lower.
Yeah, and it really and then we'll probably see two. Yeah, right. Yeah, so we're either going to get a wedge like that, which, you know, more often than not resolve with the trend, which would be lower, or we're going to get a second leg higher. The first thing I would look at would be the 38.2 fib of the entire decline, which from October, which comes in about 35, 75, and that's also the 78.6 of the last swing lower. You know, the ES and oil both really like that 78.6 fib. You always
So I
get
wonder
it's
why
one of
that
those
is.
fibs. Again, it doesn't always turn it there, but I think enough people look at it that you always get a reaction. So if you, and get, you know, a reaction is enough. So if you get a reaction and you get a trade-off, you know, you can get on side, and the worst case you'll get is a scratch. You know, it won't work. It'll come back or a few times. So I quite like trading them. Yeah, but otherwise I think we're going to 46. So
Wow, wow. Okay,
yeah.
that would be a huge move back. So Dennis Gartman
Well,
would be wrong.
that's the yeah, that's the 70. Well, yeah,
We
he could
joke
be.
about that here about Dennis Gartman's call, but anyway. But
I
I
just
like.
think, you know,
Go ahead.
sentiment gets just too. I just think sentiment sometimes gets too, you know, unbalanced. You know, oil doesn't really trade on fundamentals. We can all talk about how we're all swimming in it, but at the end of the day, you know, it's really how everyone else is positioned, and if everyone gets too bearish, it's going to get it's going to go higher even if we are swimming in it. So
Right. Yeah, that's a great point. So as far as what you do from your analysis perspective, it seems like to me you keep everything extremely simple, and you like to look at just ABC patterns, and you're very good in identifying harmonic patterns. Could you tell us a little bit why you enjoy those so much?
um, just because they give you really high probability reversal points when everybody's positioned the wrong way. So you know there's always two legs in it before you buy it or sell it, and by which time everybody's convinced that the trend is churned and we're going higher by the time you get to your sell level, and vice versa. So they're quite high probability trades because they usually start, you know, like a lot of moves with a squeeze. Everybody's position wrong, and then suddenly it's like, oh no, we're going the wrong way. Get out, get out. So um, yeah, so they either work or they don't work, and I don't like um, so yeah, I don't like trades that don't work quite quickly. I don't like sitting
Right,
around getting chopped around because inevitably it'll run your stop before it'll work. I like trades that
right.
work. So for that reason, I very rarely just sell a level. I'll mark it and then I'll either watch the price action, and if I miss the first kind of entry on that, then I use lower time frame moving averages to get in, which is, you know, the very first way I learned to trade. I learned with moving averages and high Kanashi candles, and yeah, I never drew a level or a fib on anything.
Okay, so now I noticed there's a couple moving averages on your
Yeah, I try and
screen.
clean them up so you can see what's going on, but I usually have them on. They do work, you know, so I know people think they don't. I think they do. So,
So how do you use
like,
them? Do you
okay,
use
so
them
if we
when
go
they?
back, say, like, if we go back to the oil chart, um, here, like, this is the daily, the 20 exponential moving average is like my touchstone on the daily and the hourly, and I don't trade
Yeah.
against it usually. So on the daily, you can see that, you know, we've broke down, and then that's capped it, and then it was a mess. Then you go, oh, you know, maybe we are going to try and bottom here. Once it starts doing that, and the moving average goes flat, then sit
So you
and
trade
wait.
more on the moving average directionality versus it crossing over with another moving average. Is that correct?
Um, I
Because there's
think that,
so
yeah, you know,
many different ways to use a moving average.
the moving average cross in a trending market is absolutely brilliant. I don't know any better way to get you back in a market that's trending. But in a market that's consolidating or range bound, it will chop you up. So, and the only way to tell is, are the moving average is the shortest time frame moving average that you're using going the direction you're going. So if you're buying off it in an uptrend, you want it to be pointing up. And if you're selling off it in a downtrend, you want it to be pointing down. And if they're flat going sideways, don't. It just don't.
Makes
It's
a lot
range
of
bound, and then you have to trade the range or breakouts.
that makes a ton of sense. Um, Now, real quick, if you have a few moments, can we take a few questions from some of the
Yeah,
viewers?
of course, yeah, I've
All
got
right,
time.
because then because they're gonna ask a lot of questions, and because are you in London proper?
I am, yeah. No,
Okay,
no, I'm just outside London. I'm
okay,
40 minutes on the train. We have an
okay.
office in London. I usually send Yoda goes in, but I try not to.
And Yoda being the Jedi economist.
Yes.
All right, for those of you that do not know him. So the first question I got is, do you really think there's going to be a Brexit? And that comes from Nick, Nick he's Italian in London. I think I always get that mixed up, or is he from the UK in Italy? I can never remember. But he asked, do you think there's really going to be a Brexit?
I really hope so. And I really do think it's 50-50. And I hope so, not because I don't love Europe, because I love Europe and I love European people. Um, but I just don't like them making our rules. And this is not about immigration or border control or anything else. It's just that I think, when you have 27 countries, um, all collectively deciding your rules, or technocrats, and technocrats, that's a nice little word for people you didn't elect making your laws. And so I think we've really lost democracy, and I would like to have some back. And I'd still like to have this great relationship with everyone in Europe, but
But
yes,
you can't have it every way.
no, you can't. No, we might and we might not. I really think that these silly changes that Cameron are asking for are not going to make any difference, one way or another. They're just silly. People are going to vote with whether they want to stay in or not.
Right. Okay.
And I would say
Well,
it's on the fence. I don't know.
Nick, and by the way, he lives in Italy. He's from the
Hi,
UK.
Nick. Okay.
Let's see. There's a couple questions that have come in. M. Roos says, "Oh my God, Nick, you sound so posh." Jared, Jared in our chat room, he goes, "Gee, the British accent is sexy." Oh, geez.
Uh,
Joe, it was Joe Trading Points. He says hello, and
Hi, Joe.
Patrick
I'm
G
such
says
a huge fan of Joe. He's on at the end of the month, and I am not gonna miss his show because I want to know how he gets his stuff.
he's gonna be on with us
Yeah.
next Wednesday, a week from today, actually. So really exciting about that. David says he was asking, where's your stop on the pound? I mean, let's talk a little bit about stop losses, because I keep mine really wide. And by the way, oh hey, really quick, some news have come out. We've got dollars actually rallying a little bit on some strong data, actually strong
Yeah.
producer prices, strong building permits came in line, housing starts came in a little weak, but inflation data ticked up a little bit, which has given the dollar a little bit of a push. So let's not too big of a push. It's only moved everything about 10 pips. So let me ask you this, Nick. As far as how you trade, um, now, like me, and I don't know if you do it the way that I do. I mean, I obviously approach every trade a little differently. Some trades I have a much longer term viewpoint. Some trades have wider, ATRs, so I have to have inherently bigger stops. I tend to be in the camp that I trade smaller positions, wider stops until I can build into a position. How do you approach stops when you're trading?
Um, I tend to I put my stop where I'm wrong, or I try to. But the market likes to do, and more so lately, it likes to do a lot of probing. So it'll go the other side of your level and have a look. So I do look at hourly closes and daily closes, because it'll go quite a long way. And I do get squeezed out sometimes, but I'm not frightened of getting back in if I put one on and it squeezes me out, because my stop was too tight and it had a good look the other side of what I was buying or selling against, then I will have another go. Um, so and I've lately, because it's been so choppy, I've been moving my stops up quicker than I would. I don't scale in. I tend to go in big size and scale out. But
Really?
then if I get another setup, then I will add as a new position.
That's interesting. So you don't
Yeah.
scale in, you scale
No.
out.
Yes.
That's a different approach than the way I trade. I tend to scale in unless I'm, completely confident about a position, but I'm usually a quarter size in or half size in, and then I build onto it based on my comfort level in a position.
Yeah.
That's interesting. Now, you also said something which I think is an interesting way to approach the market as well. You scale out. So if you go in large size, why do you choose to scale out?
Um, this is embarrassing. When I very first started trading, I was really bad at taking profit, which I'm sure that will resonate with a lot of people. And
Oh
so,
yeah,
and even though I would have levels and marked or whatever, and
Nick, we lost you there. Nick, I can see her data. I just
and
can't hear.
I, you know,
Oh,
I
there you are.
struggled with positional bias. I don't do that anymore. But hello?
Oh, I
So
can
I don't
hear
know what
you.
happened then. Okay, so I would, can you hear me now?
I can. I can. We have
Can
a
you hear
little
me
bit of a
now?
delay. Yes, we got a little delay.
Good. Okay, so I used to take out profit at set points. So if we got to 3R, I would take half off. If it got to 6R, I would take another half, which was a quarter of the original trade, and do it that way. Um, uh, and yeah, I would have strict rules. You know, if it gets to 1R, I move my stop up and that kind of thing, just because it stopped me being an idiot. I'm a bit more flexible now, and I certainly you have to adapt to the market at the moment, and it doesn't always get to where you hoped it would get to, or 3R, or you'll fix things in. Now I'm more like I wouldn't I wouldn't close in a position entirely unless I'm prepared to trade it the other way. I'll always try and run a little if I can, but that's been very difficult the last couple of months.
That's very interesting, and that's good to know. I try to explain to people, Nick, that there are so many different ways to trade the
Yeah,
market, and there's no right way. I mean, I can definitely say that everybody's got a different approach, and you do what works for them, and I think that's a very interesting way of trading the market. That's different from the way that I trade, but I can understand the reasons why you would, and that
yeah,
makes a lot of sense to me. A team, and by the way, a team which is she's got an interesting past. She worked at the Wise Trade Group with me in our support department. She had worked with us for 10 years ago, and
okay,
she left the Wise Trade Group. I want to say probably around 5 to 6 years ago, and she trades on her own at home and listens every day to the Morning Edge, and this is how she makes her living now. She's a very great woman and had a great time working with her in the past. She asked you, Nick, what time frame do you usually trade on? What time intervals are you usually looking to enter?
um, so I do my analysis from weekly and daily charts, and I'm usually looking to enter on an hourly chart. Sometimes I'll go down to a 15 minute. If I'm watching on a level to see what's going on, I'll go down to a 15 minute. Or for oil, I'll quite often um, get down to a 15 minute. Like for a couple of years, I traded oil and nothing else on a 5 minute chart every day. So that's the only one I kind of really go low on. Yeah,
That's interesting. It's probably more a characteristic of the just the 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 instrument itself because of the amount of volatility that we've seen in it in recent months. You have to
right.
sometimes take it down to those smaller time frames. I had a couple people ask, like Andy. You might know Andy. He had asked, "What's your view of the euro dollar? Do you have any particular view about the euro? Because I know myself, I just think it's range bound more than anything. So how about you? What's your view on the euro, if you have any?
Yeah, I am a little bit bullish the euro dollar, and I think that we um I don't know if we got is that can you see
Yeah, yes,
the
you are at
euro
the euro.
dollar
Yes,
now?
I've got it.
Probably not. Okay. Yeah, last year really. I'm a simple ABC girl, so I think that this was an ABC, and then lower, and now we're making a small one. We'll probably make a small ABC lower, um, but I think ultimately we'll um, go to about 118, and I'm a big seller there.
So maybe a brief new high.
So, yeah, it's range bound. It's range bound, but I don't believe the top's in.
Got
It
it.
might
Okay.
be, but I don't. I think there's the potential to get a 118.
Got it.
Um,
and I could see that,
Today I have my
especially.
bear suit on.
All right.
I'm going to go back
Um,
to the week. Go back to the weekly. Um, yeah, so
are you there,
it's one of
Nick?
those ones that's too hard to call. Yeah, I think, like everybody, I'm looking for support around 110, 110.50. Um, and if we can get support there, then we'll continue higher. Um, but potentially 109.50. Yeah.
Okay, I got a question from Jim. He asked, how do you use fib extensions? Like maybe your
Oh,
127% or 161% extensions. How do you use them?
okay. I use fib extensions on the corrections on the smaller swings. Okay, so I'm just going to go down one like this. This is euro dollar. And I put the fib extension on this like that. Okay, so that's the correction. That's the biggest move, biggest, most recent move. And I look for a reaction at 127, which we got here, and the 1618. And that's where it turned. And outside, it'll go to the 2.618.
Got it.
But I put them. That's how I use them. So they're on the trends or the smaller swings in a trend. If I take that one off, I will. If I did it here, it would be on this one, and you can
Right.
see that the 127. So I'm looking at the 127, the 1618, and we went all the way on this one to the 2.618. So
I almost
that's in an
universally.
uptrend. And if I do it in a downtrend, I'll do it the opposite way. So here, this is an hourly. I put it on here and I do it like that. But yeah, that's how I draw them. That's how I use them. And I haven't
Awesome.
drawn that very well, but anyway, yes, that's how I do it.
That's great, Nick.
And I also do it. Okay, so I've got one more. I've got one more trick I was just going to show you. Okay, so
Please do.
when a market's moving up and I'm looking for it to trend, so I'll like Eurodollar is a bit like the S&P, and oil, it likes the 786 as well, which it turned out here. So I'll put it on. So between the sort of 50, the 38.2 and the 78.6, I'm looking for a continuation higher when it trends. So I put that on here. This is very 50 pips. He always likes the 50, but here you can see came back to the 618, continued higher. So then you move on to the next swing. Right, so you would on this one you'd be looking for a continuation higher from this zone if we're going to keep trending higher, and we didn't. It failed. So, and I usually leave on that fib on the last swing to see how it behaves off it. Euro doesn't want a picture, so once the top's in and that low's gone, then you put it on there, and then you'll see that each one of those fibs you can usually get a reaction. So I don't think I've drawn that very well, but that works really well in stock indexes like the S&P. In the 2007 high, if you put a fib on the last swing higher, the 2009 low was at the 4.23 fib of that last swing higher.
Awesome. So
Exactly, and we ran it from there. So that's kind of cool.
that is cool. That's very cool. Um,
Next question.
got it.
Yeah.
Let's see. Abraham asks, if you trade in large size, what is your risk per trade? Is it more than 3% risk per trade? Because I talk about risk per trade a lot in our daily webinars because I think,
Absolutely not. No, it's
okay,
it's 1%. It's 1%.
you
I have
know
lots of
that's
risk rules. It's 1% per trade. I never have more than 3% at risk at any one time. So if I have 3 open trades with the stops not moved up and I want to put another trade on, I have to put one of them to break even or move it up or tighten it up. So at any one time, I've only got 3% at risk and only 1% on any one trade.
that's really great to hear, Nick, because you and I have never talked or had discussions
Yeah,
about risk. And I think it's extremely important, and anybody who listens to this daily webinar knows that we talk about it quite frequently about, keeping, per trade a 0.5%, 1% per risk, per trade. And, if you're spread out and you've got, multiple positions on, you want to manage your risk appropriately. And I think you saying that, you never have more than 3% of your account risk at any given time is a huge statement that traders need to really pay close attention to, because it's this market, especially if you're trading the currency market, is very easy to get over leveraged, and that's how people get
yeah,
hurt.
exactly. And if I lose 3% in a day, I have to stop trading. I'm done. It doesn't matter if what's going on. You stop trading. And if I lose 6% in a week, I stop trading for the week because I'm obviously not reading the market right, or it's not behaving, or either way, you're not going to be in a great headspace to make the
Sure,
decisions.
sure, and I'm sure that doesn't
And I
happen
have
often.
had no, but I have had to do it.
Yeah, of course.
Yeah,
You have to have
yeah.
those rules. You
So
have to have those, like a governor in. So when it hits you a certain way, I think it's imperative that you take some time off to you said it exactly right. Your head's not in the game, or the market's not behaving properly.
no.
And that's
So
a perfect way to look at it. Now, Windsor, who's in Germany, asks, do you trade alone or do you trade in a group?
no, I trade with one other person, so I'm half of a trading team.
Got it.
So
Okay.
so we have to agree.
You have to agree on setups. How does that
Yeah,
always work?
yeah. Well, it kind of depends who the other person is.
That's
We
great.
won't go there. He's sitting next to me,
Oh,
jabbing me. No, I'm joking.
poking you. Okay.
Exactly.
Okay. So the
No, it
next
works
question.
really well because when you trade on your own, it's very easy to tell yourself little lies about how much money you lost, or whether that's a really good, there's, if it work when it works well, there's somebody else there going, oh no, that's not a good idea. So
Yeah, that's true. I mean, it's a lot of checks and balances, which is extremely
it is,
important.
yeah.
Very important. Dan asks, why your views on the Aussie dollar are so bullish. I follow her on Twitter, and she says she's been wanting to be bullish for some time. Is it just technical, or does she have some fundamental backing behind it? Many thanks very much, and I love your accent. That comes from Dan.
Oh, thanks. No, it's just technical. It is just technical. So
It's more of
I
a
think
technical
here's the
view.
thing. Yeah, Australia's like the tale of two economies. So they've got the commodities in the West that have just been completely annihilated, and then they've got raging property boom on the East Coast. And I think that if we all think that perhaps the dollar move is a bit overdone, and commodities are going to have a bit of a bounce, then so is the Aussie dollar. So I suppose if I had to look for a fundamental reason, I would justify it that way, but it really is technicals.
Okay. Catherine says, "Hi Nick, it's lovely to hear
Hi.
you." And she asked, "Do you have any views on the FTSE?" Thanks. And Catherine's in London, I believe, or near your neck of the woods.
Okay, so today is a really key days. Key day for stock indexes, really for me. The VIX expires. Okay, so since the start of the year, everyone's been really bearish. No doubt they've been hedging away in the VIX or buying the VIX to hedge their um, longs. And so obviously, just as the VIX is about to expire, we have this amazing 4-day rally. So that's obviously not a surprise because the market makers always win. What happens after that today, I think, will be really interesting. And we could see a big down day. If we don't, then uh, I'm prepared to say that we've double bottomed. We'll take out the 1st of February high and we'll probably go to 1960 or more.
Stage a bit of a recovery then.
Yeah, because I think I tweeted a chart ages ago from last summer's high. We've made a perfect ABC. I'm going to switch to make sure I'm on that screen. So
sure thing. I'll let you know what I see. Okay, yeah, I can see the S&P.
Yes.
Right.
This is an E-mini, so simple ABC again. This is an ABC. So that green line is the ABC. This is a continuation chart, so it rolls over when the thing rolls over. So this is where the ABC is, and that's where we've bottomed. So because the market likes a 786, I think that I think it's probably around, I think I've got it around 1910, 1050. It says 1911, but that's because it hasn't drawn it right. It's 1910. That should cap it, and I'm wrong above sort of 1926. And if we trade above and a close above 1926, I'd be looking for 1978 next.
Okay.
And the 200-day is all the way up at 2027, and if we get up there, then when you see an ABC like that, I normally say we're going to retrace 78.6 of the whole ABC move, and that's 2063.
So I mean, if we revert back to the mean, I mean that's a pretty far distance away.
Yeah.
Yeah.
It is.
Okay.
Yeah. But everybody got
go ahead.
quite bearish, and that's it doesn't matter what you think about the fundamentals of the market or earnings or anything else. If people get too bearish, we can get there.
And that's interesting. You've said that a couple of times, Nick, which I think is it's important to hear coming from you. You factor in positioning in the market quite a bit, don't you?
Sentiment, yes, I do. Sentiment and COT reports, I do look at them. Yeah, very much so.
Okay.
And I think that's one of the reasons that the market's been so difficult, because it hasn't been trading on those fundamentals. It's been trading on how everyone's been positioned. So everybody thought that the trade of the century, the Fed were going to hike and the ECB were going to cut. So obviously, selling the euro dollar was the trade of the century, and look how that worked. So
right, exactly.
It doesn't work. Yeah.
Good point. Good point. Now, Vikram asked about the DAX. Do you trade the DAX at all?
Sometimes. I wish they had a mini DAX, because they're quite chunky, aren't they? And
yes,
it hurts when you're wrong. But yeah,
right.
I do trade the DAX. I had some DAX yesterday.
Okay, Vikram would ask if you had done any technical work.
I'm just cleaning up my DAX chart.
Okay. Your charts are not that messy, Nick, by the way. I've seen some really messy charts in my time, so.
I didn't prepare any. Okay, I'm just going to clean up some stuff here.
That's okay. Like I said,
I know, I'm not used to letting people look. Okay, so the DAX really likes a 61. The DAX almost always, if it can, will turn at a 61.8 retracement. It'll have a go anyway, which to me is enough of a cushion to make a safe trade. So the last swing lower, the 61.8 of that is 94.52. It's above my favorite 20-day moving average. I'm just going to take off my secret orange moving average. So I think that that's pretty much nailed on. We've taken out this low, so it's messy. I see it in a channel. I know. Hold on. It's roughly, and we're sort of testing it. I play around with these because I find that if you, and this is not how they traditionally tell you to draw them, but quite
You know,
often.
technical analysis is
Anyway,
not, it's not an exact science. I always try to explain to people.
it's
You
a
know,
bit
you gotta
fuzzy.
be, yeah,
So,
you gotta fiddle with your trend lines, and they get
okay,
adjusted throughout the day.
yeah. So, like traditional technical analysis. So that's where I think that we'll go at a minimum. I'm just going to take off this one as well. Um, if we take out this swing high and that takes us out of this channel, yeah, we're going to retest the highs. But for now, like obviously we're still in a downtrend. This blue line is this previous low. I'm just going to, hang on. They're so complicated, these charts, sorry.
No, it's okay.
Continuation charts. So we get the rest of the picture. Yeah, so here we are. We're trying to hold below these previous lows. Let's see if we can. I think it's more likely that we'll go up and say hello to that 61.8 fib retracement of this last swing, and then if we sell right off again and close back below, then that's a good test of these lows, and it stays bearish. If we keep going higher, then that's that.
Great.
We
That's
will see
oh
10,400.
wow. Okay. And there's a lot of people. I was saying a little earlier this morning, a couple hours ago. I was just reading a Goldman technical report too about, a lot of people are looking for lows in the equity markets around here, near term, and looking for this bounce. So it
Yeah.
seems like it's matching up a lot with what you're saying. I'm
That doesn't
sorry.
always work. Like if everyone's looking at it, that quite
Right.
often just means liquidity for the shorts. But if we can break a few key technical things, then nothing gets people chasing it, like the fear of missing out. So the
Sure.
money will
Sure.
come.
Um, Now, Leon he said, I'm English, and boy, you have a really nice voice. So, and he said he's even English. So, he said, how is it possible to trade big size in something like currencies and only risk 1%? If you have he says, if you have $100,000 account, you go down 1% on a trade. How much size have you got on? But I think, I'm gonna take a stab at this, Nick, and then I want you to go ahead and
Yeah.
see if
So
you.
like $1,000 account, if you do a 50 pip stop in the pound, that's four lots. Or I tend to I trade futures in the currencies more often than spot currencies. But yeah, like a lot of if you can't calculate it yourself, or I have an Excel sheet that does it for me. A lot of the websites or Mataf have one, a position size calculator. So you put literally, and it does it for every currency. Like there's 500 pairs. So you put in your account size and you put in your entry and your stop, and it'll tell you how many lots and you can choose whether you risk 1%, 2%, 3%, and it'll tell you how many lots to buy. So do it like that and be really disciplined about it, because if you don't consistently do the same size on every trade, you'll end up, and this is really annoying, you'll end up, not putting enough on your trade that's a massive winner. So you have a massive win, and you'll have two losers, and your massive winner should have been way bigger than the losers. But if you've got your size wrong, Murphy's law says that it won't work. So if you're consistent like that, it works really well.
Okay, all right. That makes a lot of sense. So that totally makes a lot of sense. So let me ask you a couple other quick questions. Do you use actually I got to ask by AB, what's your CCI and RSI setups that you use? Do you tend to use the CCI all the time?
I like the CCI. Okay, I like the CCI because the CCI on an hourly is like my timing tool. So it's CCI and a stochastic. And so if I'm buying, I want to see the CCI moving up and going through zero, and vice versa when I'm selling. And yeah, I do. I like it a lot. So I used to have
Awesome.
a Woody's one, and I don't know how to put it on my CQG.
And you also use the relative strength index as well.
Yes, I do. Yes, I do. I like the relative strength for divergence.
Got it. That's awesome. Nick, I've got just a couple minutes left with you, I want to say it's been an absolute pleasure having you here. I know a lot of people follow you on Twitter, if they don't follow you on, I'm going to take over the screen right now if you don't mind.
Cool. Yeah. No. Please do.
No, that's great. But let me go ahead and take that back over. But for those people that don't follow you on Twitter, you are Nick Trades, NIC Trades, at Twitter, and you and I have had a really great relationship over the last couple years, or several years actually, and I'm so glad that we've been able to stay in communication, and I have a lot of respect for what you do and the analysis you put out there to the community. So thank you very much for doing that for everybody, because I think you give a lot of people a lot of great information on the markets.
Oh, thank you. You're such a lovely guy. Thank you so
Appreciate that.
much. You
You know,
really are. No,
it,
you're awesome. Thank you so much. This is such a
oh,
great show. Like I haven't had time lately, but I used to listen in every day. It was a really cool show. So
well, thank you
helped
very
me a
much.
lot when I was starting.
I appreciate that. Hey, I got one last question, and I got to ask. This comes from David, who always likes to make some funny comments. He asks, "Does Yoda actually talk like Yoda 24 hours, 7 days a week?"
No, he doesn't.
Dang it! Now it blew my whole
Thank
idea of
God. I got a Yoda question.
Well, Nick, I want to thank you for being here with us and being so generous with your time. And remember, folks, you can always find her at Nick Trades on Twitter. You can see her right here, and she's a wonderful follow. Great at harmonics, great at technical analysis, and really great at timing and charts that she puts out. So make sure you give her a follow if you're not one of her 10 million followers already. So
You're so kind. Thank you so much. Really, thank you so much.
all right. Well, Nick, we'll see you in the Twitter sphere, and I want to thank you again for being here, and appreciate you spending the time today.
Okay, thanks. Bye,
All
Bill.
right. Bye-bye. And traders, that was Nick Trades, and she's, again, this is her on Twitter. She's a wonderful person to follow, in my opinion, and one of the very first people that I followed on Twitter, and continue to really appreciate her work. I apologize that I'm not going to be able to get to a lot of your questions today, because she is, we obviously wanted to spend as much time as we could with Nick, but I'm glad that you could all be here. We haven't seen a lot of activity in the market since the data had been released. Equity markets are still grinding up a little bit. The dollar has been pretty firm following the PPI data, but more importantly, the FOMC minutes are coming in just a few minutes. Kip should be here, and I want to put up the bias chart for you guys so you can make sure you get a copy of that before you leave. Kip, are you here?
I am here.
Hey, good morning, Kip.
Good morning. How are
Did you
you?
get a chance to listen to Nick a little bit?